The Australian dollar has been somewhat stronger than we expected this week, rising above 76.5 cents, its highest level since the RBA's 3rd of May rate cut. So it's fully unwound the impact of the UK Brexit vote. The Aussie dollar has enjoyed some support from improved global risk appetite, with the US stock market reaching record highs this week. There are increasing signs that the US economy is not going to suffer any major impact from the UK Brexit vote. Economic data for the most part in the US is fairly encouraging. And yet, because of that caution over the global economy and perhaps lingering impact from UK Brexit, that has seen markets reluctant to price in significant risk of higher interest rates in the US anytime soon. As a result, the US dollar has been somewhat soft despite that better run of data. There's also evidence this week that Australia's economy is not suffering any major ill effects from the Brexit vote. We saw the June NAB Business Sentiment Survey improve from May, even though it was conducted only about a week after that Brexit vote. And July consumer sentiment was down 3% on June, but that's not a bad outcome considering the Brexit vote and also the uncertainty over Australia's election. The Aussie dollar also found some support from Australia's June employment report. This showed a modest 8,000 increase in employment, but the details showed a sharp rebound in full-time employment. The unemployment rate ticked up from 5.7 to 5.8%, but so long as it's below the 6% plus levels that prevailed this time last year, the Reserve Bank of Australia is not likely to be too concerned. In Australia's calendar for the week ahead, we don't have any major economic data releases before the 27th of July Q2 CPI data. Instead, the focus will be on Tuesday when we see the RBA's minutes from its July meeting. Recall that the RBA left rates on hold at 1.75% as expected, but in the statement it did drop a little bit of a hint that it would be watching the CPI data very closely before making its decision on whether to cut rates in August. Westpac continues to expect an August rate cut, as inflation should be very much under control. Markets are pricing about a 55% chance of a rate cut at the August meeting. That's one factor that should keep a bit of a lid on the Australian dollar's rallies. In terms of international events in the week ahead, the US calendar is reasonably quiet, but in New Zealand on Thursday, all eyes will be on a short statement from the Reserve Bank of New Zealand on the economic outlook. Markets sold the Kiwi dollar this week in expectation that the RBNZ will be downbeat in this statement and that will pave the way for another rate cut in August. As a result, the Aussie-Kiwi cross rate rose above 106 this week to its highest levels in about 1 month. Also on Thursday, we hear from the European Central Bank. No change in policy settings is likely, but maybe there will be a bit of a hint that further easing could come in the months ahead, partly in response to the UK Brexit vote and the strains that that's placed on the European financial system. All of this should leave the Aussie dollar fairly well supported, but probably starting to run out of steam ahead of the 77 cent area. We would expect those rallies to peter out and for the Aussie to trade mostly a 74.50 to 76.5 or 77 range in the week ahead. We'll speak to you next week.